Click the bell icon to get latest videos from Ekeeda.
Hello friends, let us discuss one question asked in university exam relating to revenue statement ratios where we are not required to prepare vertical income statement. Let us read question, how to mark the items and how to calculate the various ratios. Following is the profit and loss account of Moon Enterprises for the year ended 31st March 2014. We have profit and loss account. Let us mark it for calculation. Opening stock. This will be part of cost of goods sold. Purchases. Cost of goods sold. Wages. Cost of goods sold. Factory expenses. Cost of goods sold. Office salaries. Administration expenses. General administration expenses. Administration expenses. Selling expenses. Depreciation on machinery. This will be part of cost of goods sold. Provision for tax. This will be deducted from net profit before tax. Transfer to general reserve. This is appropriation. This will be deducted from net profit after tax. Final net profit is given. Sales. To calculate gross sales, we are required to add credit sales and cash sales. Closing stock. This will be deducted from cost of goods sold. Sale of scrap. This will be deducted from cost of goods sold. Dividend received. Non-operating income. You are required to compute the following ratios: gross profit ratio, stock turnover ratio, administrative expense ratio, net profit before tax ratio. Preparing revenue statement in vertical form is not required. First, we have gross profit ratio. Formula for this ratio is gross profit divided by net sales multiplied by 100. To calculate gross profit or gross margin, we are required to deduct cost of goods sold from sales, net sales. Gross profit is equal to net sales minus cost of goods sold. Let us calculate now gross profit first. To calculate COGS, we are required to add opening stock, purchases, wages, factory expenses, depreciation on machinery, and we are required to deduct closing stock and sale of scrap. Cost of goods sold, we got rupees 15 lakhs. Now we are required to calculate gross profit ratio. Gross profit will be equal to net sales minus cost of goods sold. Net sales minus cost of goods sold divided by net sales multiplied by 100. Since we have 18 lakh plus 7 lakh, 25 lakhs. There are no sales returns. So this will become net sales 25 lakhs. Net sales 25 lakhs minus cost of goods sold 15 lakhs divided by net sales 25 lakhs multiplied by 100. So gross profit ratio is 40%. Next ratio we have stock turnover ratio. Formula for stock turnover ratio is cost of goods sold divided by average stock. Let us calculate average stock. Average stock is equal to opening stock plus closing stock divided by 2. Opening stock we have 4 lakhs. Closing stock we have 6 lakhs. Four lakh plus 6 lakh divided by 2. So average stock we have 5 lakhs. Cost of goods sold, we have calculated cost of goods sold 15 lakhs. Cost of goods sold 15 lakhs divided by average stock 5 lakhs. So we get stock turnover ratio 3 times. Next we have administrative expense ratio. Here we have administrative expenses, office salaries 1,20,000, general administration expenses 1,30,000. So total administration expenses 2,50,000. Administration expenses 2,50,000 divided by net sales 25 lakhs multiplied by 100. So we get administrative expense ratio 10%. Net profit before tax ratio. Net profit before tax ratio. To calculate net profit before tax, from gross profit we are required to minus operating expenses. We have to add non-operating income and deduct non-operating expenses. Gross profit we have calculated here, it is 10 lakhs. Minus operating expenses, here we have administrative expenses calculated 2,50,000. Selling expenses we have 1,12,500. Dividend received non-operating income 1,000 rupees plus 1,000. So net profit before tax we got 6,38,500. Formula is net profit before tax divided by net sales multiplied by 100. Net profit before tax we have calculated 6,38,500. Net sales we have 25 lakhs. Net profit before tax ratio is 25.54%. In this question, we have calculated required ratios based on the information given at university exam paper. Thanks for watching this video. Stay in tune with Ekeeda and subscribe to our channel Ekeeda. Thank you.